One of Xerfi Global's latest reports examines world gambling companies, which find themselves on a steadily growing market worth over 215 billion euros in 2005, more than 303 billion euros in 2013, and which is set to exceed a value of 330 billion euros by 2015, giving a healthy average annual growth rate of 4.4% over the 2005 to 2015 period. The report covers regulated operations provided by gaming companies, such as casinos, state lotteries, as well as other forms of gambling, such as trackside sports betting, amusement halls, video lottery terminals, slot machines, bingo halls, and online gambling, which is proving to be the sector's brightest star. Regulated online gaming revenues increased at an average rate of 15% during the 2003 to 2013 decade, and nearly doubled between 2006 and 2013 alone. By 2015, online gaming is expected to account for over 10% of the global gaming market. This is due to a number of reasons, particularly growing connectivity, the legislation of gaming activities in new jurisdictions, the increasing sophistication of betting platforms, such as websites or applications, successful marketing initiatives, such as advertising or welcome bonuses, as well as the rising popularity of online betting in association with major sports events. Online gambling is not, however, the only mainstay of the industry. Casino gaming revenues have increased by 1/3 over the last 10 years. It is interesting to note Macau's role in this growth. Macau may be the home of a mere 1.2% of the world's total casinos, but it is set to generate over 1/3 of global casino revenues by the end of 2014. Particularly liberal gaming legislation, surging influxes of mainland Chinese and offshore tourists with increasingly deep pockets and incentives for casino development have meant that Macau has become the world's casino capital, dethroning Nevada in the United States, which has in turn been negatively impacted by the global recession and high exposure to table games with volatile revenues. So how are gambling companies reacting to the current market situation? Gaming companies' key strategies vary according to the market's main segments. In the casino segment, capacity expansion, that is to say investments in new casinos, is to continue, albeit at a slower rate, after a previous period of accelerated expansion. In the years to come, key markets for new casino capacity investment will mostly be located in Southeast Asia, Singapore and the Philippines, which are promoting the development of their gambling markets, although Macau's supremacy as the world's largest casino market is far from threatened. They are also concentrating on diversifying their offer of services, with resorts and restaurants to keep customers within their facility networks, and are furthermore focusing in on high roller clients. Meanwhile, state lotteries are becoming more business-orientated due to semi-privatization, and will focus on larger distribution networks and the development of their online activities. As for amusement hall and machine gaming operators, they are likely to tap into further digitization, such as centralized video gambling machine networks, which will raise efficiency and promote demand through increased game variety and interaction. The fate of gambling companies and the extent to which they can grow will, however, be conditioned by changing legislation, which remains an influential force on the sector.